There was a drive headed up initially to try and get our economies of scale up to, we called it internally the Project 200, to get to 200,000 tonnes, 300,000 tonnes. And we achieved that. The numbers actually show, apart from the gross profit line, that we did a very good 6 months. We achieved better turnover than we thought we were going to do. We expanded in all the segments, being the bulk sales, the stockists, and the export division. They were all up 25, 21 and 20%. So it was all shared in the growth. The fact that the GP line was down, and it was down by 2% from 18 down to 16, that 2% came on the back. We were heavily overstocked at the beginning of the period, and we looked to flush that out, especially the long-standing stock. So we managed to do that. We had the drive, so the sales guys were going in and eating our opposition's market, especially on the back of the fact that the whole economy that we were in had retracted by the 6%. So we understand that if they're going to go out there and achieve a 28% increase, it's going to be on the back of some price winning over, and hopefully that's going to stick. We also had, towards the end of the 6-month period, a couple of decreases in the market, which gave us stock that had been sitting in at the higher prices being sold at the new prices, and therefore giving us probably 2% down is a good outcome for us. We've also increased the infrastructure, which comes through in the other cost line. That's rolling out our infrastructure in Africa with Accra and Kumasi being set up in the west coast of Africa. We have big opportunities there, and the infrastructure's got to be put in before the turnover and certainly the profitability comes. We're also going into the Mozambican market, which we believe is going to be good for us. And locally, the express drive that we've had, trying to get that up and running quickly, just really to make sure that the abilities of spinning off from the DC, the distribution centre that we have in Klip River, can be utilised well throughout the whole group. And getting that platform in and up early really is a start of how we expect things to come. It's sort of the primary platform. Once we've got 6 and then up to our aim of 20 express branches, there shouldn't be any more big infrastructure expenditure in the DC. It's really variable costs that come with it. So the economies of scale from now on will be good. The fact that we were 2% down in our GPs, under these conditions, we will take that. If things stabilise as they are now and we don't push the growth, we should be able to get the 2% back anyway. And if we add 2% onto the bottom line, it ends up getting back to 50 million, 100 million at the end of the year. So that's not a bad place to have been, given the environment that we've been in. But we expect a lot better than that. We expect our once things do turn around, we'll get growth on the current platform that we've got. So as it turns around, we'll get increase in turnover as well as increase in the GP on that turnover, and all of that should flow through to the bottom line.